Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Thursday, June 19th. Let's take a quick look at that NASDAQ market. I said earlier in the week I was looking for volatility Wednesday, Thursday, and Friday. You can see here Wednesday's action. It's a step in the right direction. The closes for the next 2 days, though, are going to be very important for a longer-term approach to the NASDAQ market. I am still bullish on that market, and I'm still bullish on the euro. However, we did trade higher. It did give us a big green candle, but right now with the structure that we're facing here, as I talked about in the advanced video, it's a neutral setup. I'm looking for a sideways to higher move. Also, I was asked about the Aussie dollar. It did trade below that bearish level. The difference between the bearish and bullish level is 60 ticks or $600 per contract. And again, that is just a reference to give you an idea of that magnitude of change. The 10-year notes firmed up more than I expected. I'm not looking for follow through to the upside. This is a bullish structure, but I'm looking for actually a sideways to lower move in today's action. Let's take a look at metals. Gold. Well, as we talked about yesterday, gold did trade below this bearish level, and the difference between the bearish and bullish level in this particular market is $1,700 per contract. My feeling with it, we are looking for an unchanged type day. That's really what we have here, a very neutral type day, and I'm looking for more of the same when it comes to Thursday's action. Also, I was asked again about silver. The difference here between the bearish level and bullish level in the silver market is $3,150 per contract. And again, I'm not saying this is what everyone should expect, but this is the magnitude of change between these two levels. But let's move on. And let's take a look at the crude oil market. It did stay weak. That's the right kind of behavior, I believe. Some of the edge is being taken off internationally with this market. And again, the difference between the bearish and bullish level in this market is $3,300 per contract. Again, just a reference. I'm looking for continued weakness, though, in the crude oil market. I think some of the energy that we saw pumped into the NASDAQ market is bleeding out, and I'm looking for more of a sideways move in that market, not continued weakness. But that isn't what we saw. Continued weakness is not what we saw in the soybean market. It did trade above this bullish level. The difference between the bearish and bullish level in that market, to give you an idea of what that represents, is $1,650 per contract for that magnitude of change. Over here in the wheat market, it also traded above that bullish level, and the difference between the bearish and bullish level in that market is 700. No, it's not. It's let's see. I want to make sure I'm going to give you the right number. It's 14 cents is the difference in that market. And what you can think about is every penny in this market is $50. So 10 cents is 500, 4 cents is 200. You have $700 move in this market, $700 per contract. You also want to remember that in the grain markets, there are mini contracts, and the metals, and in the currency market, there's micro contracts, so you can reduce the size of your positions and the capital requirements for those. Well, that concludes today's market studies. Thank you for being with me. I'm looking forward to being with you again tomorrow, and in the meantime, take care.